Hey guys, welcome back on the channel. Today we are going to go over Kamino. This will be a protocol overview showcasing what you can do with the protocol. Mainly there's 4 features, products that Kamino offers. The heart and soul of the protocol is the borrow and lending features. So these markets are actually what drives the whole thing, the whole idea behind Kamino. They will allow you to leverage your position and even make the most out of their liquidity vaults, which are none other than deposits that Kamino handles for you into specific liquidity pools for specific dexes that you can see here. The vaults are managed by Kamino, and once you deposit into any of this, you get what they call the K tokens, which do symbolize your share of the vault, and you can then leverage against that, which is a very clever idea to keep your capital still liquid even after depositing into the vault. Then you'll have multiply and long and short. Both of these involve riskier strategies because they do play with leverage in a way that, let's call it, more pronounced, in a stronger way than liquidity, and even lending by using some of your collateral will allow you to. So we're going to go over all of these features. It's going to be a complete protocol overview. Kamino, in my opinion, is a great protocol for any user on Solana to start investing. It has lower risk strategies, 100% passive, to more high risk DeFi opportunities, so it can definitely cater to different risk levels. But let's go in detail into all of these features so you can understand what Kamino has to offer to every DeFi user. And by the way, everything here does not need KYC. This is fully decentralized on chain, so everything can be tracked on chain. But you do need to provide some collateral upfront if you want to borrow. That's the main difference between the traditional finance and crypto. In here, the amount that you can borrow will depend on the size of your collateral, but at the same time, this has no bureaucracy. You deposit, you're allowed to borrow. No paperwork. You can get your first borrow in minutes, or even go with higher risk stuff. And remember, during the video, if there's something that I misexplained that you would like me to give further information upon, let me know in the comments. Maybe even some suggestions, open to hear from you guys, or just share your experience with Kamino. The whole point of the channel is helping people, so it's really good that if you have been using Kamino and are happy with it or not, just let us know of your experience down in the comment section. Okay guys, that being said, let's explore Kamino and dive in right away. Now, to get things started, let's jump here on CoinGecko and see what is Kamino Finance. Kamino Finance was originally created to offer users the easiest possible way of providing liquidity and earning yield on chain. They have very user-friendly features such as the protocol's one-click auto-compounding concentrated liquidity strategies. As you can see, this quickly became the most popular liquidity pool products on Solana and laid the foundation for what Kamino is now. So what started out as a simple borrowing and lending protocol evolved to be a DeFi, a decentralized finance protocol that unifies lending, liquidity, and leverage into a single secure DeFi product suite. What this means is that on Kamino, you can not only borrow and lend your assets. So when you lend to a pool that allows other people to go there, borrow your funds. When you're lending, you are essentially earning 100% passive income. It's just the same thing as it works with Aave, a very popular borrowing lending crypto protocol that I already covered here on the channel. You don't need KYC. You can deposit. Your deposit becomes your collateral and you can borrow against it. And also on Kamino, you can provide leverage liquidity to concentrated liquidity dexes. You can build your own automated liquidity strategies and use concentrated liquidity positions as collateral. Now let's see in practice what every of those things means. Now, one of the things that makes Kamino very interesting and user-friendly and even beginner-friendly is that you can have, for every of these 4 main products, a simple explanation. It's a brief, straight to the point 4-step explanation for each, accompanied by a diagram which helps users understand it more in depth. If you want to know more about any of this, you click the learn more link. This will straight up open Kamino's docs where you can find deeper information about what the topic is. And also, again, for all of these 4 products, whenever you scroll a little bit down, you find investment options. So randomly, let's go into one. and you'll have not only a deeper explanation of the investment option, but also a quiz. And this is a really neat feature because you can test your knowledge. And although the video is not financial advice, what I would advise you to do, especially if you're a complete beginner, is that you can definitely read the docs, take the quiz even, and if you pass it with flying colors, you'll have anything from 4 to 5 questions, very basic. But if you pass the quiz, it's likely because you have at least a basic understanding of what the product is, how it works, risks, etc. And if you do not pass the quiz, then you don't have enough of understanding about it, and of course you shouldn't invest in it. Now going back here on Kamino, we have these 7 main tabs that you can see on top of the screen. Each one gives you access to a different feature. Right now we are using the swap tab, so this is going to allow you to swap any token. You can put limit orders here even, meaning that you can buy crypto or sell at specific market prices which are not the current ones. So for example, right now Solana is worth $135-$136, right? So what you could actually do is that you could set a limit order to sell Solana to $150. When the market reaches that price, your order will be automatically fulfilled and you will sell your Solana automatically. Or maybe you want to buy the dip and you are expecting Solana token to go down in price, and maybe you want to buy it when it reaches $120. You can also set up a limit order for that. And as you can see, since this is a feature that is still on beta, the swap feature is coming soon. This will allow you to swap tokens, but of course, being a feature which is still in the beta phase, don't rely on it fully until everything is pretty much concluded. And you can use it of course, but don't put too big amounts of funds into it. That's a pro tip, because there still can be bugs that could happen because of it, okay? So now let's move on to borrow and lend. So you can start by supplying assets, which will allow you to earn yield on them and use them also as collateral. Of course, this is optional. You can just earn 100% passive income by depositing, supplying to that pool. You'll earn yield as other people come and borrow your funds, right? And you do not necessarily need to use them as collateral, although you can. But if you choose to do that, then your borrowed assets will be borrowed against your deposit, which is your collateral. So let's say if you deposit $1,000, you can borrow against it. You cannot borrow more than the amount that you deposit. You can borrow almost as much, as you will see later on, but the more you borrow, also the more the risk of liquidation. So for example, if you borrow up to maximum loan to value, which stands for LTV ratio, this will be the highest amount of risk you will take. Since if you reach liquidation, if you hit the LTV, and that can happen due to market conditions. For example, if the assets that you supplied, they drop in value, that could trigger liquidation. Let's say you deposit $1,000 worth of Solana and borrowed 900 against it. If Solana starts to go down in price and suddenly those $1,000 now are worth 900, you can be liquidated, because in this protocol, yes, you can borrow, but it's always going to be under collateralized, meaning that your deposit, which is your collateral, only allows you to borrow against it an amount which is lesser than what you deposit. And that's why if your collateral starts to lose value, you can lose your collateral via liquidation, while also retaining your borrowed assets. That's important to know. If you want to learn more, you just click here. It will redirect you to their docs where they do explain everything in more detail. So if we scroll down, we see there's 5 different tabs here: GTO market, GLP market, main market, altcoins market, and Ethereum market. These are markets that Kamino uses, but they are actually offered by other protocols. For example, GTO market is offered by GTO. GLP market is offered by Jupiter. Then we have main market and altcoins market. I guess we could call this Kamino's markets because they are native here from Kamino. And the main thing you should know, the difference between these, is that main markets uses stable coins and high market cap cryptocurrencies. We're talking solid stable coins or blue chip assets in crypto. We can see here you have of course Solana, USDC, Coinbase's Bitcoin derivative CBBTC. We also have Ethereum here, wrapped Bitcoin. So you get the idea. These are high market cap cryptocurrencies. But in any case, let's move on. So here on the altcoins market, we have more risky stuff. We have our meme coins from the Solana network. We have Pengu, WIF, Bonk, FWOG, and even if there's something else other than meme coins here, you will find here lower market cap stuff or stuff which is more volatile, more prone to risk. But also with that risk comes also higher promises of rewards, because you will see that the supply APY might be generally bigger when it comes to that. And you might be thinking, okay, so why is there USDC also here in the altcoins market? Well, because if people want to leverage their altcoins positions and borrow against that collateral, some people do apply that strategy, but they leverage their crypto by using a stablecoin, and that's why there's USDC here. Although the total supply is much lower, you see 3.14 million when compared with the other stuff here in the main markets, which has a total supply of 250 million. So this is a market which is rightfully called main market. We have blue chip stuff, more solid stuff. People are more comfortable using those markets and depositing more substantial amounts of money when compared to altcoins markets, okay? So it essentially depends, what are you holding, what do you want to supply and borrow against here in Kamino. What you need to assess when looking for the supply APY, so this is what you're gonna earn. And by the way, APY accounts for the rewards that you will get to be constantly compounded into your position. So for example, if you deposit $1,000 worth of SOL, assuming that this APY remains constant, after one whole year, you will see an increase of 7% on your deposit. And then you see there's the star icon and there's a little lightning icon. So the star icon is showing you that this position earns a points boost. This points boost refers to a potential future airdrop for the Kamino Finance protocol, but as of now, I don't know more details about it. But if you're just using Kamino, you start accruing these points right away, as long as you're using supplying or borrowing from pools that have this star icon. There's probably going to be different boost values for different pools, so that's also something you need to check if you're interested in getting the most points. Then the lightning icon shows you that this position, this pool, is earning incentives. So not only you're getting a percentage on the yield that users do pay by borrowing your assets. So you see here, Borrow APY, if there's users coming to this pool to borrow the SOL that you and others deposit, they will pay this APY. Part of it is going to pay liquidity providers to you. So this APY comes from that, plus incentives coming from Jito itself. So the protocol itself, Jito, is allocating on a weekly basis 18,000 GTO tokens. So what we're looking at is a total combined APY that comes from the lending APY plus the Jito rewards incentives. And this breakdown basically applies to every single pool that you see here. Just let me give you a quick heads up regarding to the Coinbase Bitcoin. This is a Bitcoin derivative. This is not native Bitcoin, and it's backed by Coinbase. So you need to be wary of that. It's important to know that this is not native Bitcoin, and you have to have full trust in Coinbase, because being a centralized exchange, no one really knows what's going on behind closed doors, and you'll have to fully trust that Coinbase, it's not cooking numbers, and they really do have the Bitcoin that they do claim to have. But you can see that this position is earning incentives up to 6.06% paid in USDC, paid in a stablecoin. So these are incentives that Coinbase is paying to users that want to supply their Bitcoin derivative CBBTC. If you want to borrow against your collateral, you can do that. So after supplying, you just need to click on borrow, and then there will be a maximum threshold, a maximum LTV, loan to value ratio, that you can borrow against. And how much you can borrow against your deposit, against your collateral, will essentially depend on what is your collateral. And if you want to know more about each of these specific markets, you can click it. It shows you a market overview that covers anything from supply info to borrow info, also liquidation info, interest rate and utilization chart for this specific pool. And then you can also get more in-depth info here in the supply and borrow chart. You can select different type metrics. This can go all the way back to 6 months or be as short as 7 days. And you can toggle on and off not only the supply TVL, but also supply APY, borrow TVL, and borrow APY. Now let's move on to the liquidity tab. In here you can actually be a liquidity provider. So it means that you will earn fees and rewards by deploying liquidity into decentralized exchanges. You just need to select a vault and deposit your assets. Kamino auto swaps and deploys into DEX pool to earn yield. This is something which is handy, because when you deposit into any of these pools or vaults, you will need to have both of the assets that make for the liquidity pair. And Kamino does all of this in the back end. So you don't necessarily need to hold right now at the moment that you deposit both of the assets. You can have one, and then Kamino auto swaps everything for you. So if you want to, let's say, for example, deposit $1,000 in a Solana USDC pool. So for example, this pool, you would need to have $500 in USDC and 500 worth of Solana. But let's say right now on your wallet, you only have 1,000 USDC. By depositing here through Kamino, actually, they will do all the swaps in the back end, and you will end up having $500 worth of each token. And they will deposit here on Radium. As you can see, the symbol here is for the decentralized exchange where this pool or vault is running currently. You can look at Kamino as being sort of a middleman. They will show you where you can go and they will do everything for you. You don't need to go manually into these DEX. This is very useful for beginners. You can do all of these things, all of these type of DeFi, decentralized investments through Kamino. And that's one of the things that makes Kamino so powerful and one of the best protocols to help new users to invest in crypto, at least in the Solana ecosystem. But once you deployed some liquidity here on a DEX's vault, you start to earn yield and you will have in your wallet fungible K tokens that essentially work as the receipt for your deposit. And all the yield that you received from these liquidity pools will be auto compounded into the K token value. You can then use that token to leverage with K lend. So that receipt shows that your deposit plus the compounds is worth an X amount of money, and you can leverage that to borrow with K lend. So you're basically doing the same thing that we just saw with borrow and lend, and now your collateral is what you have deposited into your liquidity pool. But this is a way to make capital even more efficient, so you can have your funds initially already earning here from the pools, and you can leverage that specific deposit with the K-Lend feature, although you are incurring in more risk, because after all, everything that involves leverage does involve risk also. And actually, let me clarify something regarding what is a vault and what is a liquidity pool, because you might see these terms thrown here and you might get wondering, is there a difference? Well, there is. Now in here you can see that all of these are vaults. There's G2 Sol vaults, Kamino vaults, Jupe vaults, meme coins, liquidity farms, stables, and Solana. So these are just filters to help you get sorted through these vaults, which can be in the numbers of hundreds of them, right? Now all of these are vaults, but they are vaults because they are run by Kamino. So essentially what Kamino does is that they do deploy these vaults in a liquidity pool, if that makes sense. So there's already a liquidity pool going, and what Kamino does is that they will have their assets deployed there and they will run their own strategy. So these are also actually 100% passive. Kamino does all of the ranges management. That can be good in a way that it's more hands-off, it's completely passive, but that can be bad also because that can eventually lead to locking in permanent loss in the event of unfavorable market conditions. For example, if the price drops, what Kamino will do is that they will try to follow the price. They will lock in permanent loss if needed, just to keep the assets in range and generating revenue. And that's why it is a vault. If we click, for example, let's just use a random example here. If we click this pair, actually this wouldn't lock in impermanent loss. It's virtually impermanent loss free because we're talking about a stable pair. But if we scroll down, you see there's a strategy being applied by Kamino. Earn fees by providing liquidity for two assets. Kamino manages trading ranges, rebalancing, and auto-compounding of all fees and rewards. So what's happening here, and that's the main difference between these vaults and providing liquidity directly to a liquidity pool, is that Kamino does all of the management. They will claim rewards, they will compound it into your position, while if you would be depositing liquidity directly, let's say this one is on Radium, you see up here DEX, it's on Radium. If you would go straight up to Radium, deposit into this pool, you could claim rewards whenever you want. You could also go out of the position whenever you want. And in here on the vaults, you can also still go out of the position whenever you want. You're not locked in for any amount of time. You are completely free in that way, but the strategy is completely managed by Kamino, and that's why it is a vault. It runs Kamino's strategy. So that's the main difference between using Kamino and going straight up to any of these DEXs and depositing yourself into a liquidity pool. And different vaults will have different strategies, of course. For example, in this one, USDS Sol, this one is also on Radium. The fee tier is a bit higher, and actually this is also a fixed range strategy. So let's find another one. So for example, for this pair, G2 Sol paired with Sol, the strategy is Drift. If you click learn more, it will direct you straight up to Kamino's docs, and this will give you further information of what's going on with Kamino's vaults, how they work, everything regarding that. Now here on the dashboard you see all vaults, shows you everything. G2 Sol vaults shows you all the vaults that have the token G2 Sol in it. Kamino vaults is the same thing, but regarding to Kamino's native token KMNO. So everything that you'll see here will have KMNO in it. The same thing for Jupe vaults. They will be only showing you vaults that have the Jupe token. Meme coins will show you only vaults deployed into liquidity pools that have meme coins. On liquidity farms you'll find actually the most interesting deals because they're being incentivized. That's what liquidity farms are. So every single one here on the list, you see the lightning icon just because of that. They're being incentivized. Users are being incentivized to deploy into that liquidity pool. Then if you are more of a conservative user, you might want to check out these stable pools because they're virtually impermanent loss free, although that comes usually with a lower reward. So you'll see the APIs here will be substantially lower than what you can find in some other pools or some other vaults. And last but not least, we have Solana vaults, which are all vaults that have Solana in it. So essentially they're deployed in a liquidity pool that has Solana as part of the token pair. Now, when it comes to multiply and even long and short, it is important to know that they are both different strategies, but they are actually built upon borrow and lending. So for example, the way that multiply works, it's showcased here, again with a 4-step diagram. You select the multiplier and deposit your Sol or liquid stake token, wherever you see featured here under assets, you can choose. Then Kamino does everything on the back end. Kamino swaps into G2 Sol and uses a flash loan to borrow Solana. Solana is then swapped again back into target G2 Sol amount and is supplied into KLand. Next step, Sol is borrowed to repay the flash loan. New position earns yield at target leverage. So you have some featured loops here, and this is just a process that has been around for how long DeFi has been around, and borrowing lending protocols showed up. You will see that there's going to be different max multiples depending on the asset that you're considering, but once you choose something you want to go with, you click here, multiply, and then on the right side you can see the multiply leverage handle. So you just slide it across the range to give you your selected multiply points. If you notice, there's 3 main tabs under the multiply asset that you chose already. And if you want to know more, there's sort of an FAQ section here where you can get access to, if you click on info and risk, it tells you what is multiply, how do you deposit, what are the risks. They cover a lot of different questions that most users, especially new users to this type of thing, might have. So multiply is a product that you can use if you're very bullish about an asset and you want to earn yield on it. You choose it here from the list, the one which you are bullish about, and then by constantly forming this loop of lending and borrowing against your collateral, you will leverage your position. And for example, if you have $1,000 worth of JLP, the max multiple here is 4x, so you can get exposure up to $4,000 worth of JLP, which will earn you yield. So you see these pairs here on each featured loop strategy. One is the token which you are depositing and the other is the token you are borrowing against it. So that's why you see 3 different asset pools here for JLP. Each will have a different depth token, and for the most part all of the others are just Solana derivatives where you can take your depth as Solana itself. On the docs you can see that Multiply is a one-click vault product that enables you to leverage your exposure to yield-bearing assets. Multiply combines underlying KLand mechanisms like eMode and KToken collateral to offer powerful yield strategies. If you're wondering, KLand, this is what we can call the infrastructure of smart contracts that Kamino developed in order to perform these strategies with just one click. So instead of you having to do these loops manually over and over again constantly, right now everything is much more convenient. It's just a matter of selecting how much you want to deposit, how much you want it to multiply. So effectively how many loops you want to have. The more the loops, the more the leverage, the more your risk exposure. You see here, this is sort of like the point where they consider it to become high leverage, which automatically increases your liquidation risk likelihood. So the lower your multiply points will be, the lower your risk exposure is. And due to the volatility of crypto markets, if you go into multiply and also long and short, you should check your positions daily, and the higher your multiply or leverage will be, the more often you should check it. The benefit of this type of strategy is that with, for example, just $1,000, you can actually generate yield to $4,000 worth of GLP. So practically you would be earning 4 times more yield than you would if you would not use this leverage position with multiply. Finally, on long short, what you need to know is that there's essentially 2 ways you can profit from this, either by longing or shorting each of these specific assets. So if you're choosing one thing or another, it's very important that you toggle on and off the buttons here before proceeding into selecting, for example, Solana. So essentially, if you want a long or short, you're just basically making a bet if the market for a specific token will be going up or down. If you want a long Solana, you deposit $1,000 worth of that token and then you choose 2x leverage, for example. What's going to happen is that Kamino will borrow some USDC against your Solana collateral, and that USDC will be used to buy more Solana, effectively increasing your exposure to the token. Now, if the prediction you did goes right, market price of Solana goes up, then you can definitely sell that Solana that you bought, at least enough of it to pay for your initial debt that you took in the form of USDC. But since Solana's price went up, you will be able to pocket the difference. You will not have to sell the entirety of Solana tokens were bought with your USDC loan. And that's in a nutshell how you can long tokens by using Kamino. Just keep in mind that leverage, it is a powerful tool, but you need to use it responsibly because you can get wrecked as fast as you can multiply your profits. Also note that if you need more information, not only you can access here your overview, so this will give you all the information about your open position. You can also get access to a live chart with different time metrics all the way back to 6 months, and then you'll have info and risk. As we saw with multiply, this is sort of an FAQ section for Solana longing and shorting. Let's finish it up talking about portfolio. This is pretty much your dashboard of all of your investments on Kamino, being borrow, lending, using the liquidity vaults, multiply, or longing and shorting. Everything will be disclosed here. You can manage your all positions from here. Then the last tab, KMNO. This is where you can find information not only about staking your KMNO tokens, but also about the governance of the protocol. When governance is enabled, KMNO will enable users to participate in protocol decision making. So you can use your Kamino tokens to vote for deciding the future of the protocol. And you can also earn some yield by staking your Kamino tokens. It shows you everything from how it works, current stake pool overview. Base staking boost right now is 30%, but this can be increased since you can stake your Kamino to earn a points boost. And if you keep your Kamino staked, you will multiply your boost over time. Of course, let me remind you that you can still use those tokens also to provide liquidity to the Kamino pairs. If you want to go that route, you'll find those back in the liquidity tab that we already went over. But basically, guys, this is how Kamino works. If you have any questions, if there's something I didn't mention or something you need further clarification upon, let me know in the comments. This is a complete walkthrough of the Kamino protocol. Make sure you refer to their docs for further information. Probably whatever question you might have will be answered there already. But still, if you want to use the comment section for that, feel free to. I'll get back to you. That being said, like and subscribe if you took value from the video. Thank you for watching. Take care. I'll see you on the next one.